start this wonderful journey. Let's begin. Looking at the market presently, I guess I just shared an information on some of the platforms, and presently the market is having an downtrend, and you could see it has broken below the resistance, and the next could go below maybe 108k. It may be possible, so just trade with caution. If there is no retest anywhere, then definitely it may break below that, the supports of 108k. So let's just trade with caution. If you have a long position, I guess I've seen that most long positions has been liquidated, especially that is it man that is trying to use $1 million to go on long position on Ethereum. He has been liquidated too. So let's trade with caution. I think these are some of the reasons why day in and day out we need to gather and then also learn as traders, right? Yeah, in as much as we are doing that, this, we should understand that growth takes time. And so far as we are traders, most often the mindset that most people jump or used to jump into trading is one of the easiest way to become rich. Trading is one of the easiest way to become rich. No, my dear, if you've been having such an ideology before jumping into trading, then this morning, whilst we are about to start our master class or our advanced session, what is going to take place with which we are going to handle different sessions. In addition, I would first let you know that it's not so. First, you have to deter your mind. Okay, you have to deter your mind from such mindset. Trading is not the fastest way, or trading is not another means of making becoming rich very quick. No, it takes time. You have to grow in different ways before you can be able to get a result. And of course, trading can make you very rich, a very bastard rich guy, a very, so like, you see, but then it doesn't just take a day, right? So maybe you've been in the industry of RoyalQ for 3 months, 2 months, 1 month, 6 months, 1 year, 2 years, and counting. Just don't be too hard on yourself. Please, I guess you guys can hear me, because personally I know the environment don't have good network, but I'm still trying my best enough. So just be honest to yourself and understand the fact that trading is not a get rich quick scheme that is going to give you all what you want. Then you'll be in haste. And I've come to realize one thing, that though most people are facing challenges, but one of the main reasons why most people are facing challenges as a result of the fact that most people want to become rich within a short period of time. They want to have that breakthrough without aligning with the system, following the processes of making money in trading. So you realize when it comes to futures trading, as an example, look, the mindset I got, understood how maybe we can leverage on the futures market. I remember a time that I shared this with one of the leaders who left. I was like, we trading on the futures market would help us to make profit, even in the bear market, and we will not panic so much when the bears appears in the market. But here lies the case now, not even up to quick bears in the market, and things are not going as expected. Things are not going as you are expecting, because the mindset is now you shifted the mindset of sport, where you think even you can hold some assets, even when you be making $2, when you're making $10 a day, it's okay for you. You see, now you are also beginning to think like an institutional trader. There is nothing wrong with thinking as an institutional trader, but everything is wrong to think as an institutional trader when you don't have institutional capital. Are we together? Everything is wrong to think as an institutional trader when you don't have institutional capital. You see, if you trade like an institutional trader, it's fine. But if you begin to think and act like an institutional trader, you'll be very wrong.
Here lies the case: an institutional trader or institutions own funds. They own the funds and they use money to do whatever they want. They liquidate the markets, they manipulate the markets. And here lies the case, my brother. Your $100 do not liquidate the market, does not manipulate the market. Your Oh, come on. Yet you want to behave and make money like an institutional trader who making $10,000 in a day, $5,000 in a day. This is when it happens. So it seems like 90% of the people that have come to realize one thing, that most of the people that we claim we are trading on the futures market, we are trying to gamble, right? We are trying to gamble because it seems like the little that we make, we don't appreciate. You feel like you have to be making huge money about you've learned indicators, you've learned price action, you've learned smart money, you've learned this, and you think, oh, all those ones can help you to be making money. So you need to ensure you can also be making good money. Sometimes you just ask yourself, but we are all using $200, and this person dropped his information and it was like he's using $200 and he's making $30 a day, $50 a day. How is it possible? So you begin to question yourself a lot about some of these things. How is it possible for someone to be using $200 to be making $50 a day, whilst you have $200 and you can only make $2 a day? Sometimes you don't understand. Yes, I know. But the thing is that if that person gets liquidated, it may be that that person is using high leverage you don't know. Look, it may be that that person just chase any trade you don't know. So he trade, this trade gets sold, you trade another one, this trade gets sold, you trade another one. Sometimes even risking unnecessarily. If people should tell you how they are able to make maybe such profits, you'll be like, huh? And you survived. Because just like you see, the way the person will be, if they will tell you the truth, that my dear, it's not easy. You see, it's not easy. So sometimes I think the way some of you are wanting to get quick results is too bad. Okay, the way you may be wanting to get quick results is too bad. That's that baddest will bother you. You may just end up leading to an accident. Now I believe if the idea of compounding, to which maybe I'll talk about a part of it today, would be a rule in your trading, you may live a long life in this market. The idea of compounding and applying trading principles like patience, exercising patience, and also disciplining yourself, you may live a long life in this market. Yes, of course, that doesn't mean liquidation wouldn't come, but I'm going to tell you something. I'm going to teach you something today. Right. Okay, so that's just by the way to just shape your mindset, then also inform you again about your decision towards trading. Now, on RoyalQ, we are dealing both on the spot and then also on the on the futures market. We are dealing both on the spot market and on the futures market, right? So let me see. Let me get my um. it's, eh, okay. So first, we may get opportunity to discuss about um, both the sports and then the futures. We may get the opportunity to discuss both about the spot markets and then also on the futures markets. And when it comes to the spot markets, like over time we've been doing today, I'll touch a little bit about trade settings, both on the spot and then on the futures. Not the usual one. But since this class is an advanced class, I'll go beyond your usual trade settings. So please pay attention. Right. Now, when it comes to trading on the spot markets and both markets, either spot or futures, I've seen one thing, and fortunate for us, the strategy that we've been using to trade using RoyalQ is called the Martingale. Okay, Martingale. Right, the Martingale strategy. Martingale strategy. Now, basically, I'm tapping, I'm jumping here for you to learn something about your setups, about the sports, about the futures. Because I know you have fair knowledge about the spot market already, you have fair knowledge about the futures market. There are certain ingredients, certain, I call them chemistry. Okay, there are certain ingredients that can be combined to form a better compound in your journey when you understand what you are doing perfectly. The idea of Martingale is very simple. Okay, and when you study mathematics, you realize that Martingale actually is a mathematical principle that has been existed for a very long period of time. Even in the 80s, 90s, they were using Martingale, right? Now, the principle of Martingale normally follows what you call the triple effect. The, the triple effect. Hmm? The triple effect. When we talk of the triple effect, first, it's a rule in compounding, and second, it's a rule in mathematics. And you see, compounding follow mathematics as well. So over here, if you want something to grow, be willing to triple your result or your effort at each point. So for instance, if you are a farmer, I'm starting with this analogy. If you are a farmer and you have three cattle, okay, you have three cattle here, and you want to increase your effort in using cattle, your next idea is to triple the cattle by 3, which is going to give you 9. If you want to increase your next idea of getting more cattle, triple your cattle by 3 again with your second result, which is going to give you how much? 27. If you want to increase your next result, your cattle, learn to triple this result. So by 3 again, giving you how much? 81. I don't know if you get it. 3 times 3 is how much? It's 9. 9 times 3 is how much? It's 27. 27 times 3 is how much? 81. Let me see if my audience are following. I'm building something. We are building something together. Are you following? Yes, it's being recorded. Okay, it's being recorded. Are you following? Are you following? Very good. Very good. Then we can proceed. So you see, the idea of Martingale follow the same triple effect. The idea of Martingale follows the same what? Triple effect, which gives you the concept that in terms of your trade settings, if you are applying Martingale strategy, the main reason why we do apply Martingale strategy in our trading is this. Now, both on the spot and on the futures market, trend changes. Okay, both on the spot and on the futures market, trend do changes with time. We will look at that, how the trend also changes. Okay, now, so far as the trend keeps changing, the only way that can help traders to be able to win more in such a market is by applying what we call the first principle is the Martingale. And that time I'll talk about the grid. The first principle is what is the Martingale. So the Martingale follows what we call the triple effect, which gives you the opportunity that if it happens, you are in a trade, you lose 1. Learn to multiply your loss by 3. If you lose this, learn to multiply it by 3. If you lose this, learn to multiply by 3. So each time the result. So when you multiply 1 by 3, you are going to get 3. learn to multiply your next result by 3. When you lose this, learn to multiply this by what? By 3, and that's going to give you 9. When you lose this, learn to multiply it by 3. That is going to give you how much? 27. When you lose this, learn to multiply your next result by 3. That is going to give you 81. When you lose this, learn to multiply your next result by 3. That is going to give you how much? 270. Let's use the calculator. This time around, the brain is getting out of. So that is going to give you what's going to be the result? 127, if I'm right. Let's see. 81 times 3 times 3. 243. Hey, it seems my math teacher is not alive. Okay, so 243. So your next result is going to be 243. Now, why do you do this? You do this because if it happens you lose this, you've lost it. Now, if you multiply this 1 by 3, the next result you get your 1 plus 2. Look at the intervals. The next result you get your $1 plus another $2 profit, making 3. Okay, so you started with $1. Now you've added $3 to it, so it's everything becomes what? $4. So you get this result, this capital plus this plus profit. So if it happens you lose these two, you get this result, this $3 plus your $9 plus profit. So everything, this place 1 plus 3 plus 9, right? So it's multiples, it triple the results with time. The more you lose, the more you triple it. No, so when this happens in trading, I'm teaching you this. This is a natural result. This is a natural trend of trading using Martingale. So the actual idea of Martingale is very simple. It's by learning how to triple your result as you keep losing. Because when you are able to win just one, when one is able to win, it brings back all the various results. So the idea of maybe we using, like we've been saying, 111, it's good. But then it doesn't follow the natural order of Martingale. Because the idea of Martingale is for a trader to lose the trade and win the trade again. Because there's the trend. Hold on. Let me clean the board. This is the trend of a market. Okay. Now we know that a market goes up. So let's assume it started like this. It went up, it came down. It went, it came down. Right? It went, it came down. So in this case, if the market start from this end, right, starting from this edge, you realize that if it goes down, the trader is able to triple it. When it goes, you make that result here. When it comes down, you buy, so you triple the results, making 9. When it goes up, maybe you are not able to make the actual profit. It comes down again, you buy another 27, then 81. When it goes up, 2, 4, 3, the entire results here has been brought back again for you to make huge profits. So the idea of Martingale is always to ensure that traders are able to make profits by multiplying the losses. And then also, the more you multiply your losses, the more you win. So when it comes to sports trading and futures trading, this strategy exists. That is what we may term it as. That is how we may apply our what do we call that margin configuration. Okay. So when it comes to analyzing and understand margin configuration, first we must understand the margin configuration is about what? It's about Martingale. So in sports trading, we should understand that sports trading is about buying low, selling high. And if you are able to understand this, look, mind you, you'll be able to trade and win more on the spot markets. Why? Because goes against, or when market goes against you using floating loss, it gives you that opportunity to be buying more with time. The buying more is not just like you are buying one. No, but you are applying the actual strategy of trading. So let's go to our RoyalQ and make that demonstration there. Let me know if my audience understand this mathematical principle here. Let me know if you understand this. Let me know if you understand this. Why was I out of the team? Let me know if you understand this. Let me know if you understand this. Let me know if you understand. Let me know if you understand. Very good. Very good. All right. Very good. So you see, when it comes to trading, if we are able to understand all the necessary information that we need to get, so far as trading is concerned, we will be able to build good concepts in trading and we will grow, both on the spot and then also on the futures market. So right. So now let's go into our RoyalQ. Let's get our RoyalQ. When you go to margin, our margin calls or margin configuration, you see mostly the question that we do ask is, how many times do I want to trade? How many times do I want to trade the next by buying more, right? Now, if we do that, you will understand that both principles being applied here works, right? So, for instance, on RoyalQ, okay, so first about sports. Now, when it comes to sport trading, before we proceed to whatever we are here to talk about here, you need to understand is not every you are expected to trade. Let me hint here. Let me hit here a little bit before we proceed. It's not every asset that you are supposed to trade. Now, we are traders with choices, right? We are traders with what? With choices. Even fortunate on the spot market, you can trade different pairs, not only USDT, but BTC, Ethereum, or USDC as your denominator, right? So when you look at this, you can trade SRP BTC, LTC BTC, Link BTC. This you can trade more of that. Not only this, if you want to search for more, you can search for more. Hmm? If it's Ethereum that you want to trade, you can cross-check. You can look at the base and then the denominator. Look. So the same thing applies here. Likewise, people using USDC. So RoyalQ has given you multiple choices. You have the choice, the freedom to make every single choice of yours. Because at the end of the day, you are entitled to your own opinion. Right. So when it comes to trading on the spot market, look, one way the days if you don't know, you don't know. Now you know. You just don't trade any assets because that asset is pumping. Well, it's pumping and you just jump on it. It's because you understood the risk and you are a risk taker. If it's flavor for you, fine. If it goes against you, you understand that you took a risk that couldn't work. So this week I published something on Facebook about crypto trading, and I was like, most people get scammed and most people also lose money in crypto trading because they refuse to learn to understand trading. So when if you come here and then you just jump on USDT, you can see this asset is getting delisted, and you still decide that you trade on this delisted coin. It's these days that RoyalQ has stopped. They've restricted some of these things that when a coin is getting delisted, you can't trade. At first, people will still see delisted and they will still trade. If you trade and it doesn't work, now you end up blaming RoyalQ. You see, so over here, you would have to make the choices, right? Now, when you come here, When you click on the last price, there are two prices, forms of prices here. When you come here, look. When you click on this arrow here, this small arrow, either on the down, so and then also the one on top, right? Now below, you'll be able to get some of the access that may run with high distance. Assets like WBTC, some of these assets with high prices, you may see them, right? And most of these assets are also ranked as part of the highest on the on market cap. So some of these things you need to come here, you need to understand them. RoyalQ will not teach you, or RoyalQ will not, even they provided a lot of information, but they will not hold your hand to come and tell you that you need to observe this and look at this and look at that before you trade. Once you decide to enter into trading, it's assumed you understand the risk in crypto before you enter into the market. Because let me be honest with you, when it comes to the entire financial market, being it forex, crypto, or whatever, there is nothing like this place is very better as compared to the other place. Yes, there may be other one, maybe low better as compared to the other, but they all involve risk. Maybe the crypto may have high advantage as compared to the forex, yeah, but they all involve risk. So you need to understand, learn and apply good risk in your trading. So on the spot market, one of the risk strategies is that do not trade any coin. When I say any coin, just jumping on unnecessary coins to trade on them. And if you want to know that, go on your coin market cap. You may see potential assets and assets with weak volume, weak cap, and so on. You may see all those assets on the trading your coin market cap. So why rush just jump on an asset, and that's the main reason you want to trade in that particular asset? No, you may end up losing. So let's assume, let's come here. You have Ethereum. So let's dump up Ethereum. So we want to trade. Okay, create. Good. So over here we have the Martingale, and then also great. Click on that. Click on trade settings. Come to manually create. On manually create, come here. You have margin configuration. So let me see over here we have seven margin calls. Okay. So what we are talking about is this side. This side. This side. Now, the rule of the martingale, as we are discussing, is to first give the trader the option to triple. Okay, it follows the triple effect. Martingale follows the triple effect. Maybe it's too difficult to understand. Let me first take you here. Okay, let me first take you here. Get something clear. Let's learn, because this afternoon I want to spend more time here. If the network will permit me, I want to spend more time here. I want to spend my time here and then also teach you a lot of things. Now, come to your ChatGTP. Ask, what is the Martingale? What is Martingale about? Okay. Before we proceed, I want you to get this thing clear. Just a simple question. Okay. Okay. Okay, so Martingale is a trading or betting strategy that involves doubling your position size with every loss, with the idea that eventually when you win, you recover all the previous losses and make small profits equal to your initial stake. Okay, so suppose you start with two $10 trade. If you lose, you double your next trade to 20. If you lose again, you double to 40. Finally, if you win that trade, that's 80 trade, $80 trade, you recover all your losses. That is 10 plus 20 plus 40, which is equal to 70, and make a profit of what? $10. So the logic is eventually I'll win, and when I do, I'll recover everything and still profit. All right, so that is a short idea. We never want to go into detail. If you still want to go into detail, you can still inquire more and ask more questions. Right. Now, so that is the reason we are saying that over here, when it comes to I'm taking time to address this because this is not trade settings. This is an advanced session, and it's part of an advanced session for us to discuss most of the things that goes beyond our normal lessons. Right. Good. So what we are saying is this. First, you can see this is an auto setup of the bot. Okay, this is an auto setup of the bot. So now you understand the main reason why you can see 2, 4, 8, 16, 32, 64. Now I believe someone is beginning to reason to understand Martingale. 2 plus 2 is what? Is 4. 4 plus 4 is 8. 8 plus 8 is 16. 16 plus 16 is 32. 32 plus 32 is 64. 64 plus 64 is 128. So over here it's not triple but a double. Now you begin, this is, you see, this is an auto a default setup. That's the reason I did not change anything. This is a default setup. We are learning something, and right after that you begin to reason to understand how you can drive a simple lesson or a simple strategy to begin to apply and win more. You say this is a default setup of the bots. And why do you think they are using 2, 4, 8, 16, 32? What is the principle? What is it following? And it's following this simple principle, which is the idea of double up, that is martingale or triple up. So 2, 4, 8, 16, 32, 64. That is 2 plus 2 is 4. 4 plus 4 is 8. 8 plus 8 is 16. 16. So anytime you lose, you double it. But then the fact about doubling a counting number is this. Sometimes when you double a counting number and you lose, the loss become heavy. It's very difficult to make profits. You may make your capital, but you may not make profits. And there are certain group of people who had followed betting for some time, and those that have done more of betting, there are certain gaming that follow some of these principles, and you understand better. When you're using double up, is that sometimes the result doesn't shows up much as compared to tripling. So if it's about tripling, so now you may see the reason why you don't need to act too smart. Sometimes you may think you are the best, you have it all. So maybe this place is one. Well, yes, one you may be able to buy more. But be strategic here and apply the actual meaning of martingale to your trade. So the idea is not just to buy more, the idea is also to buy more and win more. Do you get it? Now, so over here, we just have 2. The next place is 4. The next place is what? 8. If we should take into consideration the triple. This place happens to be, let's assume it's 1. It simply means this place will be 3, this place will be 9, 27, 8, 1. So that's up to the fifth call. Now, let's look at it this way. Someone may ask, so does it mean, what if I don't have, this is 9 times, okay, buying the same assets, not the actual money. This is not $27, but 27 times. Okay, 27 or 27 times. When it comes to the aspect of futures, I'm dealing with both the sports, even though I'm talking about sports now, but this cover up both futures and in sports. So pay attention to this. When it comes to the aspect of the futures, this does not only help you just being able to win more, but if you try doubling or tripling your next results, you see, if you buy heavy, one thing about the futures market is that if you buy less, market does not move less as you thought. Okay, but if you have more funds to buy more, always you are static in the market or stable in the market, and that is where the tripling effect comes in. So if you're applying triple effect in your trading, you realize that if this time around it bought $3 and the next one it's able to buy, this is not actual in an actual $3 I'm talking about. Mind you, over here we are talking about the number of times. But we are saying if it's able to buy $3 here and the next one it's able to buy $9, you could see that it's this $9 is heavier than the $3, which will give you more momentum to stay long in the market. But just imagine you bought $3 here, the next one you are buying $2 or $1. A little price movement will just wipe you off. But if you keep increasing, if the wide, okay, if you see the width and then the wide of the thing, so you look at it this way. Now, if it's here, you've been able to widen up the journey here. So you look at the distance, you realize that it's very heavy to draw you back to liquidation. I don't know if you get the idea. I don't know if you get the idea. I don't know if you get the idea. You get it. Do you get it? Do you get it? Let me know if, please, do you get it? I'm here alone. Okay. All right. Very good. Very good. Come again. I don't think I fully understand. Think I fully understand. Come again. All right. Now, our language is very simple. Our language is very simple. Our language is very simple. Okay. Now, this is what you are saying. Okay. This is what you are saying. When it comes to margin configuration setup, over here, we have the multiple buy-in ratio. Multiple buy-in ratio. And what we are saying is this. What could help a trader whilst using your RoyalQ? If you really want to learn and make more profits, what could help you is applying what you call the Martingale. Okay. Now, I took time for us to search more about the Martingale, even though that was just a less information of it. Okay. Idea of Martingale, it's mostly a drawn back fall. like a tool like betting, okay, where if you bet at one trade, you lose, you triple it. You lose, you triple it. So it follows what you call the triple effect. By another means, you can also decide to use what you call double up or double if you don't have much funds. But the triple works better as compared to the double. Now, the main idea of this doubling and then also tripling is to widen first on the spot market. It gives you that opportunity to be able to buy more and then also win more. It gives you the opportunity on the spot. It gives you the opportunity to buy more and then also do what? Win more. Which simply means if it happens that, let's assume my capital is $100. Okay. I'm being very strategic that okay, I'm buying just $5 or I'm buying $5 as my FBA. So me buying $5, wow. So this may be the reason why we will end this session, but so we'll move. They've been light out over here since yesterday. Let's proceed. Now, looking at this, if my capital is $100 and I'm using just $5 of this, the next thing that I'm going to do is I want to triple my trades. Okay, so this time round, when I come on the first buy, maybe I'm buying one, which is $5 in addition. So I have $90 remaining. Okay. On the second time, I'm buying three. So that is three times of five of my FBA, which is going to give me $15. Okay. Now, the next one, when I come, I'm buying nine. Okay. Now, nine times of this same first buying amount, which is five. That is going to be 9 times 5 is what? 45. Okay. 45. So out of the $90, I have $45 deducted out of it. So what we are saying is this. If it happens, you are trading. The more I do this, mind you, I am ensuring that first on the spot market, the idea is to be able to win, right? And to create new average prices. What helps you is that if you are using this, either the doubling or the tripling effect, what will benefit the trader is this. One, you are creating higher average prices. And also, you'll be able to make huge profits anytime it's buy and then sell on the spot market. You'll be able to make huge profits anytime it buys and then do what? Sell. When it's buy and sell, because let's look at the gap. Now 5, 15, 45. Okay, 5, 15, what? 45. If you are to make 1%, that is 1% on this $15, 1% on 45, what? $45. And mind you, since you are tripling, it's also widening and then also creates higher average prices for you. And what is the work of an average price? An average price is to ensure that it can draw closer your current price to the average price for your trade to be sold out of the market, right? So over here, if I have been able to buy $5, $15, and then also $45, I'm widening upward my trade. Now, the cost of it on the futures market is this. If I have $5 and there is a drawdown against me, now, once there is a drawdown, I'm effecting towards liquidation. But if I'm able to buy $15 in addition to this particular $5, it simply means I've widened things out here. Why? Because I have huge capital which supersedes the first amount. That is the meaning of the tripling effect. Right? So since the first amount, the second amount, both is heavier than the first amount, it's widening me to be able to do a stay long in the market. Talk less if there is, let's assume this is the distance of liquidation. $5. Once is $5. So let's assume this is the distance. Now that I've been able to buy $15, it's widening up for me. Now I create a very long distance of first liquidation because now I've been able to add $15 more in addition to the $5, not just $5 in addition to $5. So adding up $15 to $5, I'm creating higher gap. Now the next one, I add $45. Between $45 and then $15, which one is high? Which one is huge? $45 is higher or huge as compared to $15. And that is how I will be able to win more in my trade. And this one, if you have good capital, trust me, you enjoy the market. So some of you, maybe you post $1,000 profits, you post $2,000 profits, and you may not see the effect of it. Mostly applying the tripling effect really works for you when you have huge capital. So those saying I don't understand, let me know if you understand now. Let me know if you understand. Let me know if you understand. Do you get it now? Do you get it? Do you get it? We have other important things to discuss, so let's not waste time on this. Do you get it? Do you get it now? Do you get it? Do you get it? Very well. Very good. Very good. Yes, it do apply to futures. That is what I was explaining just now. All right, so let's proceed. Let's proceed. So you can apply this both on the spot and then also on the futures market. Right? You can apply this both on the spot and then on the futures markets. And I've taken time to explain the effects of it on both markets, on both the spots and then also on the futures markets. Now, mind you, you have to take your time to consider your capital and see how you can triple or double it up. Do you get it? You have to take your time, know your capital, and understand how you can be able to double it up. So over here, let me see. So the example you used of $5 is leverage taking care of. Is leverage taking care of? Yes, of course. Right. Now the next thing about futures markets, when it comes to margin configuration, is this. The next thing about the futures market when it comes to margin configuration, that most people also mistaking things, or they mistake things here. Let's look at it. Now, I've always been saying this. Mind you, this is an advanced class, so we are just tackling some of the advanced knowledge that we need to get to better our understanding about trading, right? Okay. Now, this is the next thing about this margin configuration. You see, we have 1, 3, 9, blah 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 here. Fine. Mostly, you see, I've always been saying this. If you have $50 in your exchange and you are using 10x, that $50 in your exchange means $500 in RoyalQ. Pay attention to this. If you have $50, $50 means, based on your leverage, that is 10x, means $500. So anytime you are trading, when it comes to the calculation of margin calls, this should be well understood. Now, You can never calculate margin calls neglecting your capital, and it's unfortunate a lot of people repeat such mistakes. So in RoyalQ you see $100. Okay, now you come here, you want to do your calculation. $100 is based on a leverage, not just $100. So if you use 20x, it simply means it was 5 or 10 times what? 10 times 20. That is what is giving you, sorry, 10 times 20. That is what is giving you 200. Okay, 10 times 20, that is what is giving you 200. Right? Now, having this in mind, if it's happened that you are doing your calculations here, you need to understand that when you say 2, when you say 3, you mean 300. Now, this 300 means 30 in your actual funds. I don't know if you get it. If your first buy amount is 100 and you come here and you say 3 times, that is 300. You mean 300. So always, whenever you're calculating your margin configuration, you see, when you come here and you say 3, you want to buy 3 times, and you forget that this is supposed to be 300. 300 is 30, right? $30 in your actual exchange. Sometimes I see people committing these mistakes a lot, and I think it's time maybe I have to address this. I don't know if someone gets what I'm trying to mean. So if your first buying amount FBA is 10, maybe you are using $1. That is 10, 1 times or 1 times 10. So you are using $1 to trade, so $10. If you want to buy more, that is $3. If you want to buy, this is not 3 times. That is going to give you 3 times 10. This is going to be 3, which is $3. $3. This is not $30. So I've seen people doing, and I'm using $30 to trade. And why has it passed? I'm using $30. No, you are not using $30. You are using $3. 3. That is 3 times 10. So it's going to be 30. Sometimes the mistake is that most people mistaking this to understand that if I'm using $10, the next one I'm going to buy is not going. So if I'm buying $1, one more time, it's not going to be $1, but rather 1 times 10, which is going to give me 10. So based on the leverage, so if you say 30, it simply means 30 times what? 10, which is 300. So please, whenever you're calculating, this calculation does not only affect your first buying amount, it must also affect your margin calls. I don't know if you get what I'm saying. Do you get it? Do you get it? Do you get it? On spot, there is nothing like leverage. On spot, there is nothing like leverage. On spot, there is nothing like leverage. Please, do you get it? All right. Very good. Now let's proceed. Let's proceed. Let's proceed. Now, when it comes to certain areas in the futures market or on the spot market, I've talked about the coin that you are not supposed to trade and the coins you are supposed to trade. If it happens, know your risk type. Okay. On the spot market, know your risk type. So as on the futures market, to know your risk type, they all matters. On the spot market, I advise, if you realize that trading on the futures market is too difficult for you, please trade on the spot market. If trading on the futures market is too difficult, don't force yourself. It is not always the case that things it shall be better. No, trade on the spot market. If you want to trade on the spot market, this is what you are going to do. If you want to trade on the spot market, learn enough and trade on some of the strong or utility tokens. Okay, when you talk of the utility tokens, those projects, but they're built on their own blockchain, like BTC, Ethereum, Solana, and so on and so forth. Now, why must you trade on utility tokens? You focus on utility tokens because even if they keep long in the market, no matter how they keep long, they rise with time. There are some of these memes or some of these coins that some of you trade on them, they never rise. You may see market pumping, markets creating new all-time high, creating new time high, and it never creates a new time high. Why waste your time on such an asset? It's because you wanted to make quick money, right? So now, in this case, if you really want, look, markets will continue to create all-time highs. I won't lie to you. BTC will create all-time high. Hmm? BTC will do what? Will create all-time high. Solana will create all-time high. Ethereum will create all-time high. Steel will create all-time high. But there are some assets. Even the you see, it's just like a wounded lion or a wounded dog. They find it so difficult healing from their past traumas. Talk of even healing and then becoming better. The person gets healed, he gets healed, he gets healed, and he never recovers till he dies. These are some of the behaviors of some of the coins that you trade on them. So you just go to coin market cap and you realize that the all-time high of that particular asset was maybe 2022. It was around $60. Since 2022, that asset has never created a new all-time high again. You just imagine. Now, how many years does it take BTC to create all-time high? Sooner or later, you see it's creating new all-time high. How many years does it take Ethereum to create new all-time high? How long does it take Solana to create all-time high? Hmm? Sooner or later, you see them creating new all-time highs. Then the coin you are trading for, unfortunately enough, you happens to buy that asset at its all-time high because you were chasing the pump. That is the reason why in advanced trading, we advise you that do not chase a pumping market. Hmm? Not every asset that you are supposed to chase its pump. Now, if people buy BTC at 130K, okay, as its all-time high, it will still create a new all-time high, a time to come, and you will never have to, I mean, panic. But, 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 if you buy a meme that want to give you that want to build your dream house, look, it will. You see, if you think what I'm saying it's not true, let's go to coin market cap. Maybe I'm not telling you the truth. Maybe I'm not telling you the truth. Let's go to coin market cap. Maybe I'm not telling you. Now, let's come here and see some of the let's look at this asset called Trump. Hmm? Trump. Mm. Let's look at the overview. Good. Now, I think I prefer Binance. So send me of it. No, this is not what I even want. Let's go back. So good. So over here, I want something. Let's go back. I guess trade history. Okay. let's search for any of these okay, this top 100. So all coins, good, so that you can be able to get any dirty coin at all. I want you to get, look, very good. Let's look at this asset called dog dog. Good. Now let's look at the dog here. Okay, this is the all-time high. So good. This is the all-time high. Okay, so this is the all-time high. Look at the price, and then the all-time low. Look at the price. There is a way I want to, let's click on this. Very good. Okay, the all-time low. This is the all-time low and then the all-time high. So when you look at the all-time low, look at the all-time high, right? And then the low. Look at it. This happens in December 2024. December what? 2024. That was the highest price. And then the all-time low happens in April 2025. There are some assets that you get, even this is better. There are some assets that you get that the highest price only happened when the asset was listed. That was when it got its highest price. Since then, it has never broken any new high again. That is the reason we are saying that if you are trading on the spot market, it's not every asset that you're supposed to trade on. So just imagine if people were so fortunate enough to buy it following its new high. Now all those people, they are nowhere to be found. By this time, they are going to sell their village houses to come and build their dream house again. If you do this, look, you can sell all your properties to buy cryptos and you never succeed. Because the price will never go up, and always you are chasing. You are not supposed to do that. Secondly, this is an advanced class, and I want you to think like an advanced trader. Now, one thing about crypto is, listen, one thing about crypto is this: crypto does not follow what you called, let me use the word spirituality. Prophecies. Listen, crypto does not respect spirituality or prophecies. So some weeks now, I've seen most traders come to my DM and they'll be like, "Oh, I've heard a prophet prophesying about this particular crypto coin. I've heard a prophet prophesying about crypto coin." Now, let me tell you this. Follow this. Some of a prophet says this, a prophet says that. Look, you regret your life in crypto. Crypto does not respect anyone. Take notice of this. Weren't we here when we all gathered? How many times didn't we talk about Trump? We're talking about economics here, and you're talking about prophecy. How many times didn't they prophesy about Trump? How Trump is going to boost the crypto economy? How Trump is going to do this? Today we are the meat, another day we are the cats. Another day we are the fish, another day we are this in the market. Now look at it. Look, you have to open the mind of your eyes to see very well, to learn very well. If not, jumping unnecessarily on any crypto asset would ruin your life. You may regret why you jumped into cryptocurrency. And that is what affects some people. And if sorry for that. If you've been affected, sorry for that. But now this is a new time. This is the new time for you to rise again, learn again, and tell yourself, now I am a good student of the crypto market. So trading on the spot market, personally, if you for my advice, what I tell you is it is better to trade on the spot market and it is profitable. If you can stick to some of the strong utility tokens, they will help you enough. They'll help you. Now, maybe you follow a particular person, talk about a particular coin, you bought the asset. It finds it so difficult to rise. Or it rose to a certain point, you didn't even know when to get out of the market. Immediate dump, you are in trouble. That is the reason why we are saying, if possible, you want to trade on a spot market using your RoyalQ, it is good. And this lesson that we've had about Martingale could even work perfectly for you when you are applying some of this on strong utility tokens projects. Right? When you are applying it on utility coins, it will help you a lot because you may make the benefit that you're supposed to make. But just imagine buying any shift coin or meme coin or any ordinary coin where you don't even know its class. You apply your triple effect or your double effect on it, and you keep seeing that it keeps damping, it keeps damping. Look, that one you don't have to blame anyone. So your coin selection really matters a lot. And to which those join the technical analysis class, you may go in-depth knowledge about that in on. Please, is that clear? Is that clear? You know, maybe I'm here alone. Is that clear? Very good. Very good. Very good. Very good. So we can proceed. Can proceed. Now, the next thing that I'll talk about, I'll say something briefly about your trading and understand about the futures market. Then I give you the opportunity to ask your question. Right. Now, when it comes to trading on the futures market, when it comes to trading on the futures market, aside all the good strategies that we are applying, the last time I was telling some of my team members about this. Now, listen, you can't trade every day. There is no good trader who trades every day. There is no good trader who trades every day. I repeat, there is no good trader who trades every day. Write this down. There is no good trader who trades what every day. So you see, some of you, let me say this. Let me lower my voice so that no one will hear what I'm about to say. Let me lower my voice. Some of you join RoyalQ. Can you hear me? I want to gossip with you. Some of you join RoyalQ and every day you see screenshots. The 27th, 21st, 22nd, 23rd, 24th, 25th, 27th, 28th, 29th, 30th, 31, 32, 33, 34, 32nd, 39, 30th, 34th. Then you begin to this RoyalQ, you make money every day. This RoyalQ, you make money every day. Oh my God. Then I'll be there every day. You want to see? Listen, when it comes to futures trading, let me tell you this. Look, I'm lowering my voice because I don't want someone to hear what I'm talking about. I want to talk to you alone. Listen, when it comes to futures markets, look, try trading every day. and you understand the reason why blowing account is so easy. Try trading every day and you understand the reason why blowing account is so easy. If you can trade the spot market every day, fine, no problem. But when it comes to futures trading, when it comes to futures trading, don't try. I'm lowering my voice because I don't want anyone to hear. I want to talk to you alone. Hmm? You see the chat every day. You want to see screenshots of your results. Every day you want to see screenshots. Like today result, to tomorrow result, the next day result, other day result, the next day result. My dear. Hey, that is abomination in trading. Traders don't trade every day. Hmm? Listen, traders don't do what? Don't trade every day. Then it may be investors or these people Ponzi schemes. They want to be seeing results every day because their money is in someone's pockets, especially that every day they must see results. Look, let me tell you, let's be honest to ourselves. Traders don't trade every day. Are you a magician? Hmm? Real traders don't trade every day. Now, what do they do? Now, let's proceed. What do they do? Now, this is simple. You must learn sometimes. Just learn. And how do we learn? Sometimes traders also set up trades. They study the trend, they study the chart. Then to see if things would go as they've done. They don't always enter trade. Listen, real traders don't always enter trade. Gbamoshi, listen. Gbamoshi, I'm talking to you. Listen. Real traders don't trade every day. They also study the chart. Hmm? Akoto, listen to me. Real traders don't trade every day. They study the chart. How many times do you use to study the chart? Some of you just jump on your trade, you see the coin is jumping like a housefly, like a butterfly. Then you jump on it, then you enter a trade. My brother, some of you, the reason you're not getting the results is because you're not behaving like a trader. Like a vampire with some little evil spirits hunting you. So you see every coin, you trade. You see every coin, you trade. Oh, this coin is pumping. Then you jump on it. This coin is pumping. Oh, my brother. My brother. Morefe, when will you learn? Hmm? When will Morefe learn? Morefe don't want to learn. No. Look, if you want to be a good trader, listen to me. Yeah, so me, the way I've even reduced the volume, I don't want like my neighbors to hear. I don't want anyone to hear. I just want to talk to you alone. Hmm? I just want to talk to you alone because I feel like if someone here now, you'll be hurt. You feel so ashamed. That's the reason I don't want to talk to anyone except you. Listen, sometimes take your time, read the chart, study the trend, back test. Now, after being able to analyze the trend, maybe you've drawn your support and your resistance. Wait, set up at least, the last time I was saying this, get 5 different assets, analyze them, and see out of the 5, those ones that will hit your take profit. When I say they will hit your take profit, that doesn't mean that you've set up the trade. You've analyzed and you know where your take profit exists. Now I'm talking to advanced traders, so listen, now I'm talking to someone, I'm talking to you. Hmm? I'm talking to you, an advanced trader, a trader who is grown up now. I'm talking to that person. Hmm? Some of you, if you don't see results a day, then you feel like your life has ended. So just take your time. This is your trading view. Hmm? This is your trading view. At least you know how to draw support and resist. You know your chart patterns, or your candlestick patterns. You understand. You know how to identify what's happening. Who is pressing the who is the next presser pressing the network. Okay, very good. Now, maybe you've drawn your support and resistance. Hmm? You've drawn your support and what and resistance. To get back and resist this very well. Mhm. Maybe you've drawn this. Just let me do now. Let's assume you've drawn your support. Maybe this is your support. Mm, okay.
Oh, okay. I think his network is quite unstable, so let's give him a little minute and see how best he can join through. All right. Yes, yes, yes. I think um, it might be a factor. It might be a factor. Yeah, I just saw your message. So his phone was going down, 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 down in battery capacity, and now he's nowhere to be found. Can you hear me loud and clear? Can you hear me loud and clear? All right. All right. Okay. Yeah. So um, uh, fellow leaders, leader OBM and leader. So I think based on how things are behaving, what do you think? Leader, so can you hear me? Hello, leader, so can you hear me? All right. So please, just a minute, just a minute. Let me reach out to him personally and see the condition. Then I'll get back to you in a moment. So just a minute.